Hey there, future Wall Street wizards. Tired of measly returns? Want to turn your pennies into stacks? Then listen up, because today we're diving into the exciting world of options trading. Options can supercharge your portfolio, but they're not for the faint of heart. Think of them as turbocharged investments capable of multiplying your gains, but also your losses. Don't worry though, I'm here to break it down in plain English, so you can navigate this thrilling market with confidence. Options trading might seem intimidating at first, but trust me, it's like learning to ride a bike. Once you get the hang of it, it's smooth sailing. Or should I say, soaring. In this beginner's guide, we'll demystify the jargon, explore the ins and outs of calls and puts, and equip you with the knowledge to make informed trading decisions. So buckle up, and let's embark on this exciting journey together. Options. The word itself sounds mysterious, right? But don't let that scare you. An option is simply a contract that gives you the right, but not the obligation, to buy or sell an underlying asset at a predetermined price, on or before a specific date. Think of it like reserving a concert ticket. You pay a small fee, the option premium for the right to buy the ticket, the underlying asset, at a set price, the strike price, before the concert date, the expiration date. Now here's the kicker. You don't have to buy the ticket if you don't want to. If the concert is sold out and ticket prices skyrocket, you can exercise your option and buy the ticket at the lower, predetermined price. But if the concert is a flop and tickets are going for peanuts, you can simply let your option expire. You'll only be out the small fee you paid up front. That's the beauty of options. You have the flexibility to profit in both rising and falling markets. Options come in two main flavors, calls and puts. Remember those concert tickets? A call option is like having the right to buy the ticket at a set price. You're bullish, meaning you believe the price of the underlying asset, the concert ticket, will go up. On the other hand, a put option is like having the right to sell the ticket at a set price. You're bearish, meaning you believe the price of the underlying asset will go down. Let's say you're feeling optimistic about Apple stock. You could buy a call option, giving you the right to buy Apple shares at a specific price before a certain date. If Apple's stock price goes up, your call option becomes more valuable, and you can sell it for a profit. But if you think Apple's stock is headed south, you could buy a put option. This gives you the right to sell Apple shares at a specific price, even if the market price tanks. See? Options give you the power to play both sides of the field. Now, let's talk about two crucial elements of options trading, the strike price and the expiration date. Remember that predetermined price we mentioned earlier? That's the strike price. It's the price at which you have the right to buy or sell the underlying asset. The expiration date, on the other hand, is the deadline for exercising your option. After this date, your option expires, and you lose your right to buy or sell. Think of it like this. The strike price is your target, and the expiration date is your deadline. The closer the underlying asset's price is to the strike price at expiration, the more valuable your option becomes. But time is money, literally. As the expiration date approaches, the value of your option will generally decrease. That's because there's less time for the underlying asset's price to move in your favor. Section 5. Placing your bets, a step-by-step guide to option trading. Ready to jump into the action? Here's a step-by-step guide to placing your first options trade. First, the first step is to open an account with a reputable options broker. Look for a broker with a user-friendly platform, competitive fees, and a wide selection of options contracts. Next, decide which underlying asset you want to trade options on. This could be a stock, ETF, index, or even a commodity. Then, decide whether you want to buy a call option, which is bullish, or a put option, which is bearish. After that, consider your risk tolerance and market outlook when selecting your strike price and expiration date. Once you've done all that, you can place your order through your broker's trading platform once you've selected your desired options contract. Finally, keep a close eye on your options position and adjust your strategy as needed. Remember, options trading involves significant risk, and you could lose your entire investment. It's essential to start small, do your research, and never invest more than you can afford to lose. Section 6. The upside. Why options can be a game changer. Now that you know the basics, let's talk about why options trading is so popular. Options offer several advantages over traditional stock trading, including options allow you to control a large number of shares with a relatively small investment. This leverage can amplify your gains, but it also magnifies your losses. Options provide greater flexibility than stocks, allowing you to profit in both rising and falling markets. Options can be used to generate income through strategies like covered calls and cash-secured puts. However, it's crucial to remember that options are a double-edged sword. While they offer the potential for high returns, they also come with significant risk. It's essential to understand the risks involved before diving headfirst into options trading. Section 7. The downside risks you need to know. Options trading is not for the faint of heart. Before you risk your hard-earned money, be aware of the potential downsides. Options are a leveraged investment, meaning you could lose more money than you initially invested. The value of options erodes over time, especially as the expiration date approaches. Options trading can be complex and requires a thorough understanding of various strategies and concepts. Don't let these risks discourage you though. With proper education, risk management, and a healthy dose of caution, you can navigate the exciting world of options trading and potentially reap substantial rewards. Section 8. Getting started. Your first foray into options trading. Ready to dip your toes into the options trading pool? Here are some tips for beginners. First, start small. Don't go all in right away. Begin with a small amount of capital that you're comfortable losing. Next, paper trade. Most brokers offer paper trading accounts which allow you to practice trading options with virtual money. This is a great way to gain experience and test different strategies without risking real capital. And finally, focus on learning. Take the time to educate yourself about options trading before placing any real trades. There are numerous resources available online, including articles, videos, and courses. Remember, knowledge is power in the world of finance. The more you learn about options trading, the better equipped you'll be to make informed decisions and potentially achieve your financial goals. Section 9. Choosing the right broker. Finding your perfect match. Choosing the right broker is crucial for your options trading success. Here are some factors to consider when selecting a broker. First, fees. Options brokers charge various fees, including commissions, contract fees, and platform fees. Compare fees from different brokers to find the most cost-effective option for your trading style. Second, platform. Look for a broker with a user-friendly trading platform that offers advanced features, such as charting tools, technical indicators, and options analytics. And lastly, customer support. Choose a broker with responsive and knowledgeable customer support that can assist you with any questions or issues you may encounter. Take your time, do your research, and choose a broker that meets your specific needs and trading style. Section 10. Knowledge is power resources for the budding options trader. The world of options trading is constantly evolving. To stay ahead of the curve, it's essential to continuously educate yourself and stay updated on the latest trends and strategies. Here are some valuable resources for options traders. First, Investopedia. Investopedia offers a wealth of information on options trading, including articles, tutorials, and a comprehensive options glossary. Next, Option Alpha. Option Alpha provides free educational resources on options trading, including podcasts, videos, and articles. And finally, tastytrade. tastytrade is a financial network that offers live programming and educational content on options trading. Remember, the more you learn about options trading, the better equipped you'll be to navigate this complex and potentially lucrative market. Section 11. Final thoughts. Take control of your financial future. Options trading can be a powerful tool for building wealth, but it's not a get-rich-quick scheme. It requires knowledge, discipline, and a healthy respect for risk. By educating yourself, starting small, and managing your risk effectively, you can harness the power of options to potentially achieve your financial goals and take control of your financial future. Remember, the journey of 1,000 miles begins with a single step. Take that first step today and embark on your exciting journey into the world of options trading.